All right. So with that, let's start the meeting. I'll just start the meeting with a pledge of allegiance, as we always do. I'll start that off. Kathleen's got the flag, a pledge of allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Ladies and gentlemen, start your engines. Here we go.
One question, please. Do I record to the cloud or do I record to my computer?
I would put it to the cloud because it's going to take up a lot of space on your own computer.
Okay, that's what I did. Thank you.
Yeah. All right, so before we get to Crestwood, one quick thing. Let's approve the minutes from the November 18th, 2021 meeting. Seems like it was a long time ago. Do I have a motion for approval?
Yes.
All right, Melinda makes the motion. Joe, can I take
Second.
that as a second?
Yep.
All right, all in favor, say aye. All right.
Aye.
All opposed, say no. Any abstentions? Motion passes unanimously. Okay, now for tonight's meeting, we have Crestwood Financial, Bill and Charlie. I'll let you guys introduce yourselves. I'm Tom Angelo, a former Tourtellotte Memorial alumni, graduate, class of 1986, and was appointed as president. I don't know if I was appointed or if I was completely, whatever you want to call it, politely promoted for that. How's that? Or appointed, right, Joe?
It's handed to you like a ham sandwich, but yes, you got it.
Exactly. Yeah. But no, it's a great organization, and it's just nice that we can carry on the legacy. So, Bill and Charlie, can we have a quick introduction from you guys, please?
Sure. I'll start and then I'll kick it over to Charlie. So I'm Billy Spencer, as you can see here on the screen next to my face. I've been at Crestwood for 6 years now. I work with individuals, families, endowments, just like the Tourtellotte Trust, to help maintain assets, grow them, and achieve goals that they're looking to achieve. And before that, I was at JP Morgan Chase for some time too. So that's me in a nutshell, from a work perspective.
Thank you.
Hi, Tom. Hi, everyone. Charlie Tricomi here. Pleasure to meet all of you and to be here tonight. I'm a portfolio manager at Crestwood Advisors, and a similar role to what Ryan has been doing at Crestwood. He couldn't make it tonight. I think due to proximity, I'm down based in Darien. We thought it'd be better if I just took over to continue kind of being able to be close to you guys so that when you do meet in person, I'll be able to quickly shoot up and have meetings with you all, but I'll be kind of the main person focusing on the investments for the portfolio. So I can get into those details in short order.
Thank you. We appreciate that. So I'm assuming that you have the financial that you want to go through, kind of show us the year-to-date returns, and obviously we can tell you what we have planned for future renovations or whatever it might be, enhancements, and make sure that we're in the right financial order for that.
Sounds good.
Sure, that sounds good. I'll share my screen.
Okay.
I've been able, okay, you got it?
Just confirming everyone can see it.
Yes.
Yes.
Great. So thanks again for having us part of the meeting. Great to see you all on the screen. I know in years past we've met in person, so thanks for allowing us to join on Zoom. As we've done in the past, we start off the meetings by just taking a look at the investment goals and objectives, just to make sure that we're all on the same page and why we're doing what we're doing. And so, the first goal is to preserve and enhance the value of the Tourtellotte Trust through capital preservation, income generation, and capital growth. Look to achieve competitive investment returns that meet current and future income needs. We can talk about the cash needs that you have in a little bit. And then, based on the needs that you've had, we've agreed to have an investment policy that is considered income, which is a target of 35% growth or equity securities and about 65% fixed income and cash. Some following slides will review where we're at with those. Let me stop there. You mentioned, well, two things. You mentioned some cash needs that you have, and also just checking in on these goals. Do these remain appropriate?
From the group, I think, again, I believe that we talked about it last year a little bit of, did we want to go a little more aggressive? But I think with everything considered, and we can open it up to the group, but I think we're still kind of in that conservative mode, but, you know, kind of be safe, obviously. We don't want to throw, you know, we don't want to throw everything into the, what do you call it, the whole Bitcoin era thing going on, and that might be a little too volatile for us.
Darn, that was going to be my number one suggestion. All into blockchain.
Meeting's over, huh? No, you know, I mean, we've talked about it, and again, I'm sure we probably will come up with it again, but I'm sure in a lot of your portfolios that you do for personal, it's probably more of an 80-20 mix.
Exactly.
Yeah, so it's always something that we can look at. And Kathleen, Joe, Melinda, I think you're kind of on that same feeling that should we go a little more aggressive, or, you know, maybe, I don't know, it's definitely for consideration. Joe, Kathleen, you have any input on?
My input, given what's in front of us this year, this particular year, with some of the uncertainty with the interest rates and Ukraine and all that, I think where we're at right now is probably pretty good.
Mhm.
Yeah.
Yeah,
Okay.
it's scary.
And we can talk about cash needs too, because that's also, you know, part of it as well, because you don't want to be taking on too much risk if you're going to be taking out, you know, a good percentage of the portfolio to fund, you know, projects and such of that. We get there when we get there too.
Mhm.
Okay.
Great. Well, thank you for that. I'll turn it over to Charlie. As you know, you mentioned some volatility that we're seeing and some of the some risks that are out there with you know, Ukraine and things like that. Thanks, Joe. I'll turn it over to Charlie for the look back at the past 12 months. Take it away, Charlie.
Yeah, if only things could still look this rosy. I mean, what another incredible year 2021 was. You know, it's been a wild ride since about the great financial crisis of just, you know, people have been the beneficiary of being in equity markets, really doing well. And last year wasn't any different. So you can see all the different indices here. S&P up around 29%. International markets underperformed. Real estate did pretty well. Bonds actually ended up with a negative total return. And the small caps did pretty well. And, you know, that's backward looking. Year to date, those are closer to about, S&P is down 9%. NASDAQ, some of those growthy names that we were talking about, some high flyers, down about 14%. International down 5%, holding up a little bit better than the US stocks. REITs down 9%. And bonds, again, down already about 2% for the year. So there's a lot of ways to slice and dice this up, but a lot of the broad market sell-off has been really caused by 15 big names, some of these big tech names that have done phenomenally well, that have continued to grow since about 08, 09. And they kind of are at the point now where a lot of analysts are thinking valuations are pretty stretched. Why does that matter? As somebody alluded to, raising rates will increase this year. In a raising rate environment, those kind of high valued companies are worth less at the end of the day when rates are increased. So that kind of is a testament to our holdings, where we don't really hold any of these high fly names. We're comfortable in this raising rate environment, and we're pretty bullish still on equities going forward. Yeah, it's
Charlie,
not
can I stop you there for 1 second?
Sure.
Kathleen,
Mhm.
Orla is waiting to be entered into the meeting.
I just admitted her.
Okay, thank you. Sorry, Charlie.
No worries. And just a quick hi, Orla. Charlie Tricome here.
Hi, Charlie.
Nice to meet you. I've heard a lot of good things about you through Billy and Ryan, so it's nice to meet you.
So you're stepping in for Ryan tonight and Billy?
For tonight, yep, Billy's
I'm here too.
and
I'm
I'll,
here.
Oh, hey,
Orla.
Billy, I
Nice to
see you now.
yeah,
Thank you.
yeah. So just going over a quick recap of the markets, how they performed last year. This is the slide. As you can see, very different from where we are just 3 weeks into the new year.
They recommended that they're gonna put 100% into Bitcoin for us. Is that okay?
Is that or Ethereum?
Yeah, Charlie only
think
said
that-
that because this is being recorded.
Yeah. So I take the laughter from all of being, that's a no.
Yeah, not this time around.
If you want to flip to the next slide, I'll kind of go in more detail to the portfolio we have here, which is a little more than 35% in equities right now. For the last few years, out of everything you can invest in, we've been pretty much overweight within the equity sector. Top left hand here in large cap names, kind of alluded to those being the big drivers of the market returns the last few years. And I know a lot of you have been through 2008, 2009, the 2000 bubble crash, .com crash. This is definitely a different story where, yes, these valuations are pretty high, but the Googles, the Apples, the Microsofts, the Facebooks, they actually have earnings to support their stock valuations and stock prices. So as much as, we have been expecting a sell-off like this for some time, it's finally come, and, it hurts when it happens, but we're not as worried that it's going to completely evaporate like it did in 2000 or 08, 09. This is kind of a healthy correction, more or less, bringing things back to better valuations. So just below that is the small cap equity section, where we have a good amount of exposure in that as well. And that's more of the growthy names. Those really hold up well as the economy continues to grow and rebound. And we expect 2022 to be another pretty good year, GDP growth wise, earnings wise. Again, not as strong as 21, but still, a little bit above normal. And what we've been kind of underweight in the equity section have been international stocks. Just looking at a chart today, their earnings are pretty similar to they were from 2007. A lot of those names, because they haven't been around technology, a lot of those tech names have been over in the US, which has, been good for us, but they have a lot of finance names, a lot of energy names. So not really strong growth names over there, which is fine. It's helped us by being underweight there since they've tremendously underperformed for the last 12 years. That could switch at some point soon, which we might add to international, given that some of these financial energy names do better in a rising rate environment. So something to look out for. And similar to emerging markets, despite the troubles with COVID around the world, we really feel like there's been a tremendous underperformance for a long period of time. It's probably a good time to kind of shift some more exposure into emerging markets.
Orly, just so you know, I'm here.
Okay.
I'm not going, so.
And then I'll focus on fixed income unless you have any questions about stocks, equities.
Oh, that's good. Thank you.
Yes, so tremendous amount of focus on what the Federal Reserve will do this year. Jay Powell just gave comments today, so very timely. So just about a month ago, the Fed expected to raise rates about 3 times this year. And then within about a few weeks after that, affirmed today, they expect to raise rates about 4 times this year. So again, what does that mean? Different sectors of the stock market, some credit, will get more adversely affected. And again, just to reinforce, we're in names that should hold up pretty well in a raising rate environment. So number one, obviously this is the overweight bond exposure portfolio. So within that, to manage for these raising rates, we have short-term bonds. So bonds that have less maturity, that holds up better when rates increase. So that helps, as opposed to having 10-year, 30-year bonds, we have an average duration maturity around 2.5 years. So that's to prepare for the raise in rates. And secondly, we have some floating rate credit, some bank loans, which helps in a raising rate environment because those interest rates reset quarterly. So they're not as impacted by these raising rates. So we really have protected the portfolio for, knowing this day would come at some point when we finally are going to see the rate increase this year. And then just for alternatives to have a good diversified portfolio, we have real estate exposure, and it's not really in the commonly thought commercial real estate area. It's also in these data centers, cell phone towers. So kind of these cash producing infrastructure, which has helped, the portfolio have an all around exposure. And then specifically, we made some trades throughout the last few months. I mean, obviously we watch it every day, but just to recap some, names we've added and reduced: Fiserv, Honeywell, Salesforce, you'll see there. And some names like a Cisco kind of met its price target. So again, being active managers, we took some chips off the table and put that into other names we felt like had stronger growth this year. Similar story with Lockheed Martin and Travelers. All right.
So this next page is a look at two different fiscal years, fiscal year 2021, which ended at 6/30/2021, and then fiscal year 2022. I'll start on the upper left-hand side with fiscal year 2021. So you can see what you started at in July of 2020, 2.8 million. $255,000 was taken out in the fall, which you can see depicted in the chart above where the gray line goes down. That's the principal balance. And throughout the year, or that fiscal year, the accounts grew just under $390,000 net of fees, which gets the portfolio balance to 2.96 million as of 6/30/2021. If you look over on the right-hand side in the upper hand corner, you can see what happened in fiscal year 2022 so far. And this is just through the first 6 months, 6 months plus, because it's through the 18th of January. So you can see where the year started, 2.9, 270 was taken out in the fall. And then the portfolio that it grew about 21,000 through the first 6 months. As Charlie mentioned, we're looking backwards over the past year plus, there has been some volatility. If you look on the far right side of this chart right here, you can see where that started. So the portfolio grew about $21,000, which gets you to 2.7 as of a couple of days ago. We talked about the allocation, heavily to, geared towards bonds. About 65% of the accounts in bonds, and how that's made up is through corporate bonds, which are the big blue slice floating rate bonds, and some other bonds like government agency bonds, things of that nature. The other side of it is the equities. We do have a 35% target. We recognize that there are some bands that we can go above that. So, given how things have run up in the past 2 years and we want to be because of rates, we're at about 39% stocks.
And it's really closer to 35% now, as of this was created about a week ago. So just as a update.
Thank you.
Thanks. Yield is about 57,000 or 2.1%. And then we measure volatility with standard deviation, and what it really is the how tight are the up and down swings relative to a market. And so because this portfolio is mostly bonds, when things do get volatile, you don't feel it as much, and so that's just what that 5.3% is compared to 14.1, which is an all equity index. Any questions here?
Nope.
No questions.
Thanks, Billy. And then I can just kind of go through this in more detail, but obviously any questions you want to ask, please. So this is just a snapshot of a more in-depth look at the fixed income, the bonds, and the credit in the portfolio. So kind of the area that's boxed in the top row, modified duration, is what I was discussing before, is kind of what do you have here. Below is the maturity distribution, 1 to 11 years, and the bulk of the bonds in the portfolio, the individual bonds, will mature and repay all the cash out by about 2.1 years. So again, it's important that we're keeping things short, meaning less than 11 years, preparing for these increasing rates. So just for a quick refresher, a duration means basically that 2.1 right there. When interest rates increase by 1%, you can expect the bond portfolio to decrease. It's an inverse relationship by that 2.1%. So in fact, we do expect the Fed to increase rates this year 4 times, 0.25% every time. So we are looking by the end of this year for interest rates to increase by 1%, i.e. expecting these bonds to be hit around 2%. And that's just price return. It should make up more than half of that by the income that they generate. So yeah, all investment grade bonds. One actually matured 2 days ago, which we reinvested in the floating rate credit so that it had better duration. So that's kind of the plan. You know, anything that matures, I think we have 5 more bonds maturing this year. We'll be reinvesting those proceeds into different short-term bonds or the floating rate notes.
So what do you consider a term on a short rate versus what we have now for yields on 1.5 maturity or 2.3?
Yeah, basically right there still. If anything,
Okay.
maybe some T-bills less than a year, kind of waiting for maybe the 3 to 4 rates to happen this year and see how things happen next year, whether they do continue to increase them. But exactly, it won't go more than like 2 years.
Okay.
Yeah, great question.
So this is a look at performance, and up at the top, this is just since inception, what the portfolio growth has been. Again, that gray line is when there's been withdrawals. It goes down, you know, because of the withdrawals, and the green line is the portfolio market value over time. So you can see the net effect of the distributions and the growth has been over, you know, just about $1.7 million net of fees as of last week. Down below, we have, that's the dollar growth, and down below we have the performance. At a high level, you can see we have the different columns for 2022, fiscal year 21, the calendar year 21, and since inception. I'll just quickly focus on fiscal year 2022 and since inception because that's a longer period of time through a couple different market cycles. But as you can see, the portfolio is relatively flat. It's about $20,000 growth, as I mentioned before, at 0.6% net of fee growth. Equities, which make up about 35% of the portfolio, you know, those did well relative to the benchmark. The global equities, which is the US, the international, the emerging markets, were up 4.1% so far in the 6+ months of fiscal year 2022 versus 2.6 for the global benchmark. As you know, we've hit some volatility the past couple of days, so this number has changed since then. On the fixed income side, you know, we've been talking about this. We're not really looking to get much return out of that given the rate environment we're in. However, we have outperformed the bond benchmark. It's not nice to see negative numbers, but you know, the bonds are down -1.2 versus -2.4 for the benchmark. So that, you know, relative outperformance there. And then real estate, which did really well 2021 fiscal year, and the calendar year 2021 is up 8.5% over the past 6+ months. And you can see if you look over in the other alternatives in the bottom there, it did really well at 35% and almost 40% for the different years. Just looking long term, you can see, you know, I mentioned 1.7 million net of fees since we started working together back in 2009. That translates into about an 88% return. Again, you know, what's doing that is the equities, which, you know, it's changed over time, and it's right now 35%. That's up 302 versus 221 for that global benchmark. Oh,
Wait a minute.
Charlie, anything you want to add, or anybody have any questions?
I think Kathleen and Joe and Melinda, I don't think we have any, well, again, we'd have to wait until we talk with Bill Birch. But as of right now, I guess if we were, Orla, if we were to ask you, we're still in pretty good shape, even with the cash outs that we applied. We're still in pretty good shape to do a modest renovation project if we had to do one, correct? Because we have to maintain 2.3, right? 2.3.
We have to maintain 2.35. So the most recent statement, I'm just looking at the document here, Billy. Where is the actual total available correct right now? I have 2.8. You have 2.
We
We have 2.7 as of a couple
2.7.
days ago, so.
Okay, I had 2.77 from my last entry at the end of December. So that still gives us a little bit more than 200, well, a little bit less than $200,000 to play with. And I guess it really depends what's going to happen over the next few months. We did do the withdrawal of 270,000 in November. Yep, to cover the cost of phase 3 of the windows. So it'd be tight if we needed a big project.
Okay, good to know. So I guess Bill Birch, we're gonna have to talk to you and tighten your purse strings a little bit. All right, let's, why don't we hit the next slide?
Well, so this is kind of a recap of everything I've probably already touched on in some regard, and happy to dive into something more specific if you all want to talk about anything with the markets, macro around the world. I know you mentioned Ukraine. Every year we have some of these international pressure points. I'll just say that there's always a wall of worry. Yes, hopefully this isn't different, but yeah, we never know. But just to reiterate, every year there's always going to be reasons not to really wade into the equity markets. So I'll kind of leave it at that. But overall, I think the big story is the middle here on the left-hand side, inflation. I'm sure you've heard about it. I'm sure you've experienced it with supplies, with wages. It's a real thing. It's definitely increased over the last year and a half. And I think we sit in the camp where it's definitely here, but we don't expect it to stay too long for reasons such as a lot of factories really thought COVID would, make demand a lot less, fewer things, less people having money to spend on things, when in fact it was kind of the reverse. People were getting stimulus checks, still working, doing pretty well, saving, willing to spend, and the supplies just weren't there. That in tandem with a lot of ports being closed, a lot of factories being closed due to COVID outbreaks, has kind of given for the supply demand issue we have right now. So we think it'll, it should play out in the next year where things kind of go back to near normal. And, we'll never get close to that, what inflation was in the 70s, pretty rampant for years. So hopefully this will kind of dissipate in the next year.
So do you see our current portfolio mix where we're pretty secure on where we are because we're so heavy bond rated?
Exactly. So again, I think the prior slide you saw there, the outperformance with the fixed income, and that was even during a period where we didn't see increase in rates. And again, bond prices have an inverse relationship. When the rates rise, bond prices go down. So definitely, the Fed acts on inflation and labor. Labor is doing pretty well, and inflation's what's the issue. So that's causing the Fed to probably increase rates 4 times this year. So that's why we're really defensively prepared for the fixed income to be in the short term, short duration floating rate notes. So in that regard, definitely portfolio will hold up well. And then within equities, you tend to overlook that during these periods. You just look at fixed income. But within the individual names we have for stocks, myself, Ryan, our analyst, chief investment officer, also focus on the different names that'll hold up in a rising rate inflationary period. So we feel pretty good there too.
I know you had mentioned we have 5 more bonds coming to maturity, correct, this year?
Yep. Yes.
Do you know the timing on those? Was that on that prior slide?
It wasn't, but I can tell you right now. Let's see, the next one should be in March. 25,000. We have a June 25,000. May 50,000. December 25,000. Should be one more. In September, 25,000. So 150,000.
Okay. So really, we're talking about 1.5% of the portfolio value, really, so it's not big numbers.
Big
Right.
numbers, and number one, I mean, it's great, the portfolio here, no tax consequences whenever we need to raise cash, but also good to have to set aside so that we're not going to potentially invest in the short-term bond fund. If it potentially could lose a little bit, might as well just hold it in cash or send it to one of the checking accounts you have to just get it out of the portfolio, if that's something you'll use soon.
Yeah, we're what, less than 0.5%, so that's okay. Okay, good.
I think that's it, Charlie, right? Was there anything else we wanted to share with the people today?
I think if just go to the next slide, if it's in there. I just love showing this to everyone, just to kind of, I know what we're experiencing isn't fun, but every year people say, Charlie, Billy, do you think the market is going to go down? Of course it will every year. And this is kind of just focusing on the bottom table here. The red signifies how low the market will go or has gone every year throughout the year. And the green bars are how the year finished, the stock market, the S&P 500. So you can, I'm sure you remember 2020, the drawdown was about 34%. Nobody thought we'd have end the year up higher. So this just helps put in perspective, into context. Every year we have a down period. This isn't to say we're expecting it to end higher, but on average, it does end positively, which is always a good thing.
Any board members have any questions of Billy or Charlie?
Very comfortable, Tom.
Yeah,
You guys doing a good job.
Thank you.
yeah. I want to thank you for,
Thank you.
the detailed presentation and giving us as much assurances as you can. Obviously, it's very tough you don't want to time a market or anything like that, and you don't want to overexpose yourself. So this, I think, for now, I think, speaking for the members here, I think we're comfortable with where we are with the 65-35 split. And, like Ola said, you guys have, a proven track record that we've had the money when we've needed it, and we've stayed above what we need to as a minimum. So far, things are good.
Well, I'd always love to see our performance, but obviously I give credit to the markets that have done phenomenally well also. So, kudos to you guys for, having the money invested in some risky stuff that has, played out. As you said, if you're invested for the long term, you're in a good position to always see it increase at the end of the day when you have a long time horizon.
I would appreciate a copy of that presentation, if you could email.
Sure, I'll email it to you, Kathleen.
Thank you very much.
If you could email it to me also, I'll put it in my folder here.
Sure, Orla, definitely. I'll put it, send it to both of you.
Thank you.
Orla, does Billy and Charlie know your future?
Yes, they
plans?
did. Yes, I have shared that with Billy and Ryan. Charlie, you probably are aware of it at this stage. Yes, so I'll be finishing up next week, but it's been wonderful to work with you guys over the last 8 years. This is my first introduction to Charlie, but for many years I've been dealing with Ryan and Billy and Leah, and you guys have always performed great for us. So we've very much appreciated it, and it's been a pleasure to work with you guys.
Likewise, Orla, and good luck in your next endeavor.
I will. Thank you.
Charlie, that might have been the shortest first client you've ever had. Don't take it personally.
There you go.
I won't. Nice to meet you, Laura. Good luck with everything and look forward to
Thank you.
seeing everyone else soon.
And
Take care.
Thank you very much.
we'll keep you
Crestwood.
guys posted as to who will be your contact going forward, okay?
Sounds good. Thank you.
Thank you.
Okay, thank you, guys.
All right. Have a nice
Right.
evening. Bye.
All right, well, that's good to know that we're in kind of a decent financial status considering the way things are going with the markets. Orla, you want to give us our perspective on the financial report now?
Sure. Okay, I'm
Don't
gonna
ruin it-
share.
Don't ruin a good thing, Orla, come on. Orla.
I'm gonna share a document here. Nope, wrong share. Oh, hang on a second. What am I sharing right now?
You got 4 quadrants.
Okay,
Tourtellotte building with window replacement is
okay,
on a-
good. I got the right one. Okay, so what we have here is, I'm making it a little bit bigger, is can you guys see memorial room repairs and building care and maintenance?
Yes.
Mhm.
I
Okay,
can,
okay, so this is our general maintenance side of our budget. So we didn't allocate anything for fiscal 22 because we had some healthy funds. And so far this year, we've only spent money on replacing our clocks. So currently we have 17,930 available for general maintenance. And so that continues to be available, and those documents will be in the folder. And then over to this side, which is our Windows project. So we appropriated 270,000 this year. At the end of June, we had 190 left. So that gave us a healthy dollars, but we've already started spending the money ordering the windows. So we have spent 222,000 so far, but we currently have available 238,000 for the next round of purchasing that's Bill Birch will be doing. Does anybody have any questions?
Could you email me that, Orla, so that I can,
Yes.
that for my records to write up in the minutes?
Sure. So I just emailed it out to you guys. It's a 4-page document. This is
Okay.
the first page of it showing our expenditures. And
Okay.
the next few pages are just a summary of where we stand money-wise. So we have 3 different sources of income for this trust. One is our general money market account with Webster, our general banking. And currently we have $242,000, 513. So so that's where we are. That's where we stand right now. Next one is our Bank of America, which, as we all know, we are unable to touch. So currently we have 165,000 in that fund. We do, as you're aware, we do receive the quarterly dividend. So that money goes back into the money market account when we receive it.
so we get the dividend, but we can never touch that principal, right?
Correct, correct. And then the last one is, oh, hang on a second. Okay, page 4 is, well, it's where we just talked about them. This is just a summary of our activity within Crestwood. The last report I have is 277. So it does give us approximately 200, well, less than 200,000. It sounds like we're less than this now, but we'll see how it is by the end of January. But so you get an idea of what we pay. We typically pay fees of about $26,000. But you know, last fiscal year we had a market change, an increase of 418,000. So that's pretty good. But you know, we've drawn down, as we know. That was our plan. And any questions in relation to that?
No?
So that's really all I have to share right now with regards to the finances. I will be, so we will keep an eye, whoever is going to be sitting, you guys are all aware what we're planning to do. We potentially have somebody who may be able to come and start working with us next week. So, but I will be available. I will be online. So, and I do plan to attend meetings where needed. So as something comes up, give me a holler. I'm happy to come in and help and answer any questions and provide any help I can give. But fingers crossed, we have somebody in by next week
Okay.
and to get us
Orla,
through
what
budget
is-
season.
Orla, what is your official timing for your new endeavor?
So my last official day is next Wednesday here. I start on the February 7th, so 2 weeks from Monday past. And but I don't have as much nighttime meetings as I have here. So
Mhm.
if you guys have meetings, I can certainly attend them, you know,
Well, thank you.
whether they're
That's
online
very
or in
nice.
person. But
Appreciate that.
yeah,
Yeah.
no problem.
No,
So-
we appreciate all the effort that, you've put in over your tenure here. So thank you. It's been greatly appreciated.
Thank you. Now, one more thing is so for logistical reasons, we're keeping me as the town treasurer. I have appointed Aaron as deputy treasurer, as he's the chair of the finance committee. So keep that in mind if anything were to come up.
Okay.
We have enough leeway with regards to signatures. We're putting parameters in place with regards to ensuring that we have the necessary controls, even when we're in between positions. But if any questions come up in that area, feel free to get in touch with Amy or Aaron or myself. We can all of you have my cell, so you know how to track me down, and I'm happy to help out where needed.
Thank you.
Mhm.
I think we need to backtrack one thing back to number 3. I skipped over citizens' comments by,
Okay.
so if there are any citizens here that would like to speak, Linda Jamilovich, not that I'm calling you out, but if you'd like to speak. All right, I guess that was her speaking. She took herself off mute. She didn't say anything, so. All right, so we'll move on to the discussion of future expenditures. Who would like to start the charge on that one? Melinda, Bill, or Joe?
Oh, well, I know Bill has a list of things.
Mhm.
Okay, so I guess the most important thing is the upcoming expenditures that are pending immediately. I received an email yesterday that the next batch of windows is due to ship on Friday.
Good.
So that's the final phase of the window project. They are due to ship on Friday. Cronenberger is anxious because they have labor available at this point. They want to stop putting them in. So the plan is going to be possibly as early as the first week of February to start working on the stair towers where we can close them off, put those windows in place. And then hopefully while school is closed during the 3-day February vacation, we can do the windows in the IT office. So it looks as though this project is going to start to roll again quickly. So
Bill, do we have anything that needs to be signed for payment or anything?
So I don't believe at this point, but I'll just get to that. So at this point, we are committed to Cronenberger for $227,590. We are committed to them at this point.
227,590.
Yeah, 227,590.
Okay.
So, in their proposal, they want to proceed with a monthly billing cycle. So I'm thinking that this is probably going to roll out in no more than three payment requests to get this done. I don't anticipate it taking any more than the end of April to wrap this up. But with that, I think we need to finalize exactly what's the payment process going to be for these folks.
Do we have to do an upfront before, at the time of shipment on Friday?
No, they haven't sent me a payment request at this point, so no.
Okay.
My thought process would be is you can Bill, if we can approve the 227,590 at this meeting. we can make a motion to approve the payment over a period of 3 months for these dollar amounts. If you can coordinate with Paula, as the billing comes in, Bill,
Yeah.
she can work with me on ensuring that we have at least Tom's signature on the payment requests. What we're planning to put in place is we typically have 2 Board of Selectmen sign a bill. With an absent treasurer, we will have an additional selectman sign a bill. But without the treasurer, if we have Tom's signature, then we're good to go. She can process payment because we will have already approved it here. We just want to keep our paperwork in place by having Tom's signature on the bills. So how does that sound? Would that work for you, Tom? Would that work for you, Bill?
Yeah, that's fine. As soon as, as soon as I get the bills, I can get Tom, we can get together and he can sign them and I can walk them down the hill to Paula if necessary.
Perfect. I just
So-
emailed them to her.
So if we
Um,
do 3 payments, we're looking at 75,863.33 for 2 of them. And 1 of them would be 34 cents.
Yeah, they probably won't come in as equal payments, Tom, because, they do AIA documentation. It depends on whatever labor is involved in that particular billing cycle. The bottom line is that at this point, without change orders, that's the contract amount is 227,590.
All right, so if we approve tonight on the meeting and we vote for the approval of 227,590, but in 3 increments to be determined by the billing cycle, we should be covered, right?
I would think.
Yep.
Okay,
That sounds good.
all right, so,
I'll make the motion to do that.
okay, go ahead, Kathleen.
All right, I make a motion to approve the payment of to Konenberger for $227,590 to be made over 3 payments based on their billing requests.
And one addition to that, which does not include a change order, which
Okay,
Bill
yeah,
had
which does
mentioned.
not include a change order, which would not include a change order. Change order would have to come back to the committee.
Correct.
So in relation to that, should we have a change order?
Mhm.
As you see, our total available for this project is 238. We're committing just under 228 right now. It only gives you 10,000, Bill. So,
There's not much.
okay, so do come back, and if I'm not available, Kathleen or Tom, contact Billy or Ryan or Charlie, find out what you have in that fund. So
Okay.
we know what our base is.
We'll do that.
So whatever you have on that day, you can make those transfers. Now, again, the transfer requests can be done over the phone by either currently myself, or you, Tom. So if I'm not available, you can make that phone call.
Okay,
Okay? So
Yeah,
just keep
thank
the
you.
logistics of it all, just keep that in mind. It's easy enough to make it happen if we need to make it happen.
But
okay.
how about, there's the general, we can't take it out of the general maintenance that we have sitting there?
We'd have to vote to take it out of the general maintenance because we broke this trust, the expenditures for this trust down into 2 separate projects.
Okay.
We could certainly do that if needed, but I think you'd probably have to call a special meeting to do so.
Okay, all right.
All right, so
I anticipate at this point, we're so far into this project.
Mhm.
With the last project, we had to add a change because they forgot to include the sash handles. Well, the sash handles are included now.
Okay.
So we're so far into it at this point that the only thing I could anticipate as a change would be if they start getting into the wood restoration and the stair towers and find out that it's more extensive than any of us believed. If that's the case, I believe we're gonna have, quite a bit of lead time to call a meeting, to pull people together and kick it around.
Okay,
Melinda,
Besides, we have some other maintenance issues that Bill's gonna talk about tonight. That might feed into that 20,000, that's
Oh,
some
okay.
17,000. set aside.
Mhm.
Okay. All right, so the motion on the floor is that we will approve to Cronenberger $227,590 in 3 increments based upon their submission of bills.
Mhm.
Not to include, or this does not include the any additional funding that would be there for change orders, which
Correct.
would require a vote of the group again.
Mhm.
I
Okay,
second.
do I have a second for that?
Yeah, second, Tom.
All right, thank you, Joe. All in favor, please say aye. Aye.
Aye.
All opposed? Any abstentions? Motion passes. All right, Bill, what else do you have?
Okay, so Melinda just mentioned some maintenance issues that we have to deal with, and that amounts to, if anybody has actually come up the front steps recently, the caulking on the front steps has started to pull itself up, and one of the steps down there, the driveway, has actually begun to lift. And it is, it's no longer has it, so they need to be pulled up and they need to be recaulked and reset. So I've got a proposal for 2 different things. One is to, and this is from Empire Historical Restorations, these are the Monacos. And that is to remove and recaulk the landing and the stairs. And that is for a cost of $12,800. And to do the work to relay the bottom stairs, to get them back down to a level height, remove the railings and put them all back, that is a cost of $9,850.
What was the name of the company again?
The company is Empire Historical Restorations.
Thank you.
Bill, what would you be looking at for timing of this project?
I'm saying, due to the frost cycles, my guess is that we can't start it until frost is out of the ground in the spring.
Do we have to wait on this for the windows to be done? Like, will these guys be in the way of the window?
Oh, no, this is completely separate.
Okay,
This is actually on the front steps, Tom.
yeah. I just didn't know machinery wise if, having 2 crews
No.
up here.
It's the landing, and because it's heaving, it's gonna be a trip safety factor.
Yeah,
So we need another $4,000 on top of what we have now.
Yeah. So one of the things keep in mind is, what's written into our ordinance, which is challenging at times like this, is any requested expenses need to go to the annual budget.
Mhm.
So let's hope we pass our budget quick.
so Orla, can we, 2 questions.
Mhm.
The 242,000 that's at Webster Bank. Can any of that be touched? And or the money that comes from Bank of America, when do we usually get that dividend check?
So the dividend check comes in, let's see, timing. 222.
I think you can see where I'm going with this, rather than us having to touch our fund, rather than making a deposit of the dividend check, can we just take it from that and then deposit the rest?
So we can, but one of the things I want to read out to you on the ordinance, which has bitten us in the past, is okay. So the Board of Trustees shall recommend both short-term and long-term expenditures options for the Board of Education. Said expenditure shall be appropriated as requested by the Board of Education, given due considering to the recommendations of the trustees. Such expenditures shall be approved by the Board of Finance and and town meeting as part of the annual budget of the town of Thompson.
Here's my question, the maintenance money that's set aside, isn't that already?
Yes, but currently that's $17,930.
Mm.
So you can spend that, and you can also spend, we can move the monies between the window project and the maintenance project. We don't have to go back to any Board of Finance or any budget process to do that. But if we were to appropriate any additional funds, that's where we're going to have a challenge, because we need to follow the requirements. So great scenario, Bill, would be no change order for the window project, and then we have all the funds we need.
So you do realize that a great scenario for any project is no change order, right?
Right.
But bearing that aside, you could move to have because they're two separate projects, you could move to have the recaulking and the resetting of the landing at 12/8. You could move forward to do that as soon as the weather breaks in the spring, because those funds have been appropriated. And then you could put the 9850 to relay the stairs into next year's budget and do it over the course of the summer, which I would probably feel better about not pulling up those stairs until school's out anyways.
Fair enough.
So, Bill, walk me up. All right, so I'm walking up to where Melinda's office is, right? That's where we're talking?
Correct.
All right, so the 12/8 is gonna do what part of that?
So when you come up from the driveway, you go up like 4 stairs,
Yep,
and then there is a landing. And then you go up the final set of stairs to that landing. So that landing's had a few lifetimes. I believe originally they were slates,
mhm,
and they pulled up the slates years and years ago, and they set Connecticut bluestone there. The bluestone started to delaminate. So we pulled up all the bluestone probably, I don't know, 12, 15 years ago. We pulled up the bluestone and we set granite blocks there. So what's happened is the granite blocks have started to move through the frost cycle, and now they're not quite perfectly level anymore.
so this is
So
right at the entry, the entry doors to the 09 building,
Correct.
okay. But that's,
Between the two levels of stairs.
all right, but that's the 12/8 right there.
That's the 12/8.
Where's the 9850?
Those first few stairs, those first 4 stairs that come up from the road to that
Okay.
landing, that's where that is.
Okay,
And that's because they have moved. And so we've got to pull them up and reset them.
No
right, so-
efficiencies. Oh, sorry.
no, go ahead, Joe.
I was just gonna say, no efficiencies from having all the work done at one time, Bill?
There may be. I don't know. I received this quote in September. And they, they sent it to me as two separate quotes. So I think they're kind of obligated to hold by that.
Bill, would you say that the landing is more of a safety issue than the stairs?
Well, I would, because you can't see it. You can actually, as you come up, you can see where that stair is just there's a little gap there. On the landing, it's so discreet that you don't see it until your big toe caught it and you're on your way down.
So the 12/8 is the more important of the two projects, correct?
In my opinion, I would say yes, it is.
So Joe or the rest of the group, if Bill was to go back to have a requote, obviously we open ourselves up for a higher situation in trying to hope that we get a one bid scenario. So
I was just saying one and done, Tom. One
Yeah,
and
no,
done,
I-
get everything disrupted one time and
Yeah.
take the 4,000 away from the windows. if we gotta go get money, we get money for the windows. It's a separate mission.
Yeah, I
My
agree with you
suggestion.
too. I mean, I'd love to see it just be a one and done. I'm just hoping that we don't get rebid and it comes back higher. That's my. Bill, what's your take on, what do you think?
Well, it's great as long as we don't have a change order on that window job.
Because that would mean you'd have to hold off until July 1st to finish any additional change orders.
Which, all right, so Bill, do you
I
think we
think,
can?
I think it's, so just thinking the logistics of this. We can't do any of this masonry work until April, May, at the very earliest. It makes no sense to try to pull those granite blocks out when the ground is thawing and freezing every other day. So I would say that we hold this, we bear it in mind and keep our fingers crossed and see where we end up on the windows.
Bill, if we had to hold off on the masonry until July 1st, according to budget timeframe, and school is out, there's less traffic coming up and down there as well. It's not the worst case scenario, right?
It's not, no, it's not the worst case. And, you know, as we get into spring, those deviations that we see in those granite blocks today, they may ease. Things have a tendency to settle back where they belong as the weather warms.
It's true.
So here's, I guess what we could do is we approve. Well, let me throw it out to the board. Do we approve where we are right now? Or do we take the shot that we have Bill go back and have them give him a one price offer? And Bill just says to him, listen, you know, we know where we're at on the two projects, but can you give us a one price bid? And we're looking at a time frame of July. Because that would give them enough time to do whatever jobs they currently have on their books. And they can at least know that they have this work coming. And we're into a different billing cycle.
I got a feeling with this particular contractor, we're gonna get a better price if we let them work in the spring.
Really?
They do, the majority of their work is for the colleges, for Smith College up in Northampton, Boston College, UMass. So summertime, once the colleges are out.
Which is May.
They have a bit of a labor crunch at that point.
You have between now and February 7th, because that's when your next meeting is scheduled, for Bill to go back and see what pricing is available.
Bill, do you want to just float the question out to them? Maybe, you know, we know this is the bid, but do you want to just float it and see what they say?
Nope, absolutely no problem.
Okay. What other projects do we need? Right now, if we were to delay this $23,000 would be added to the monies that we need to put into the budget.
So as of right now, we don't have anything else, you know, on the maintenance end that's pressing.
Okay.
All
You
right.
know,
so
you have to think about the other, you know, long-term projects.
Right.
And the larger scope projects that you may or may not want to move forward with.
Okay. So what are we looking at, Joe? I guess we throw this one into your ball court. What are we looking at?
The one I'd like to add to the working list is the Riscavage Auditorium has needed an AV system, projector and a screen for a long time. So I just put it on the list and we start gathering some quotes to determine what that would be.
And
So
Joe, that would
actually-
also. Oh, go
Actually,
ahead.
we had a consultant in today. That somebody that Heather got for us, they were in today. They looked at it, they said probably about the biggest screen they could put in there would be a 140-inch diagonal screen that would be retractable. they said a portable projector is kind of out of the question. I know that had been something that when Bill Steglitz talked to us, he had mentioned you were kind of thinking about a portable kind of thing that we could disconnect and move somewhere else. He said that's kind of out of the question for something of that size and magnitude. He looked at like a ceiling type mount, which really doesn't do much for the aesthetics of the room. He did say that the possibility is there could be a retractable mount that actually disappeared up into the attic and disappeared when it was not in use. A sound system that's user-friendly. He said ballpark, and this is like just a very ballpark. He said we're looking at $70,000. That does not include any sound attenuation for the space itself.
Right.
Because again, one of the problems with the Rascavage Auditorium is it was built for one purpose, and we're using it for a completely different purpose.
Yeah, understood.
So it was built for musical productions and things of that nature, and the acoustics are very live in that room. So when you come down to, I don't know if anybody remembers, we tried to have a couple of board meetings up there. And we've had some other presentations where there was a sole speaker, and it was just, the acoustics were just way too live. So I reached out today to a couple of contractors from the Boston area, that do sound attenuation, and I'm going to try to get somebody to come in and give us some kind of a ballpark on what it would take to kind of tone that room down a little bit for what we are currently using it for.
Right. Active or passive, because there's also sound canceling technology now, as opposed to the buffer panels.
I wouldn't know that, Joe, until I get them in the room and talk to them.
Okay.
Just,
Okay.
I have a question. Joe, you've probably, or Bill, you've probably looked into this, but is there any likely to be any grants out there for historical preservation buildings for AV related systems? Just a thought.
So,
Yeah.
well, certainly, I think there might be.
What's involved in that?
Writing them.
Okay.
They're not fun, but we win a fair share of the ones we apply for.
Yeah. So maybe that's something we can work on. $70,000, if we can get even a portion of that, wouldn't that be wonderful?
Tira has
Yeah,
access. Tira
Who
has
does?
access to a database
Okay,
of grants that she subscribes to, that we could search on.
okay. I'll send her a note tomorrow. I'll have a chat with her tomorrow and see if she has any ideas.
Thank you.
Are we allowed to do a GoFundMe, or is that against our bylaws?
No, I mean, we can certainly do a fundraising event.
All right. Yeah, I guess that's kind of where I'm going with that. We can do fundraisers?
We can do fundraisers, yeah.
Sure.
Okay.
We're a 5013 or something like that?
No, we're a
or
founder, we're a registered, we're a private foundation. So,
private foundation? Okay.
yeah. So we did register as I don't know whether we're a 501c3 or whether we're in that ballpark of IRS determination for exemption status. But
Okay.
we're also listed as a private foundation.
Okay. So let's just say that this AV screen projection and sound dampening is probably, let's just say 100K.
Mhm.
If we were to move forward with that project in addition to the stair project, that would be what, 123,650.
Yeah.
We have 17,000 in the general maintenance, barring no change orders. So now we're down to 123,17, we're like 106, if we were able to use all of that 17K.
So we also, barring no change orders, have the balance between the 238 and the 227 that we've approved. So there's approximately 10,000,
So we're back to about the $100,000 mark. anyway.
realistically 100,000. Now keep in mind, so there's a couple of scenarios here to keep in mind. Because we're limited in accessing funds that have been approved through the budget process, and it is a pass-through, should we approve funds, we don't necessarily have to go and spend them. So for example, if we decided to approve 100,000, you don't have to go spend it. There's been occasions where we haven't, you could have approved $50,000 or $25,000 for general maintenance and it never came up. So why would I take it out of the fund? I kept it into the fund earning money. And then we would just do an accounting entry at the end of the year to make it a receivable. And we would just go through the motions. So keep that in mind. If we did not spend it, it's still there. It's still
Yeah,
available to us.
most of the time when we're making the we're approving the spend, we're really approving you, myself, and whoever the option to sign.
Exactly.
Yeah.
So
Okay.
that's an option because it just means it's already there. You've approved 100,000, it's already there. But if you don't do that, then theoretically you have to wait till the next budget cycle.
So Joe, other than the project that you just put out there, is there any other project that's on the list? Oh, Melinda says yes. Melinda, what do you
We
have?
do have others. Yeah.
And handicap accessibility into Rascavage.
And we already had Bill, you already had a bid on that, didn't you?
Well, a couple of years ago, we applied for a grant
Yes.
to try to pull that off. And I forget exactly what kind of number we had there, but yesterday what was it, Melinda?
120.
120.
120.
So yesterday I got our architect back, Lynn Smith, who did the work on the window project for us. She came back yesterday, and we are going to we're gonna go ahead and try to get some hard numbers on what that project's going to cost today if we have to fund it. So again, out of that repair and maintenance money, we're going to have some bills from Lynn Smith that we're going to have to pay her for her engineering work.
All right, but the 120 is probably what, 2-3 years old?
Oh,
bid?
all of that.
Like it was my first year, so I'm gonna say it's 5 years old.
Wow. Okay. All right. Joe, you had some others on your list?
I think we shouldn't be greedy from the historical side, so I'll leave it at that right now.
Okay.
So what we're looking at is possibly putting into our budget in the ballpark. Right now, we're talking ballpark numbers of about 125,000.
That's before even adding the lift access.
Right.
Right. We have the money.
Well, we did.
Well, we do and we don't.
Well, we have funds. So we have funds available in the money market account. Traditionally, for bigger projects, we always draw it down from Crestwood. We get a better return from Crestwood than we do from money market. Money market's is bigger than it has been in a while. But as soon as we pay those bills, we'll be drawing the funds from that money market account. We're just moving money around. It's not like the money is in the money market to spend for these window projects.
Right. No, but I mean, we even have money in the Crestwood account we can draw down.
You have a little bit less than 200,000 right now, which is not great.
No,
Crestwood.
it isn't. Oh, wait a minute. What am I looking at then? I've got to get that. It was 2.7.
2.7, and we need to have 2.35.
3.5. So we got
Yeah.
400.
I was thinking 2.5. I'm sorry, I was looking at the wrong column.
Yes.
2.35.
Yeah,
We got a couple more 100,000.
yeah, we got at least 250 we could draw down if we wanted to and leave ourselves a cushion.
Yeah, you're right. You're right.
Yeah.
Sorry.
Okay.
So Orla, tell me.
Glad you're looking.
Orla, the 242 that's at the Webster Bank, is that money that sits at Webster that we've already approved?
Yes, it's the
Or-
money that we took out from Crestwood already to cover the cost of these windows.
Okay,
Right,
so
and
when I
that's-
approve a
But
bill,
we can't spend it again, Tom.
No, you
No,
can't
no,
spend it.
no, that's for the windows. So we leave
okay, so
that.
yeah, that's the money that when I
Mm-hmm.
sign something, you take the cash from there.
We
Okay,
do. That we
all
do.
right.
The only
So-
additional money we would ever get is the Bank of America dividends.
Yes.
Okay.
Quarterly payment.
What is
Whatever.
that generally? What is
About
that?
$1,500 every quarter.
The
All
peanuts.
right, so it's not,
It's about
Yeah.
$5,000 a year.
Yeah, okay. So we could theoretically put 250 in if we wanted to. Right now, I'm looking at 150, 125, 150. We, don't- like you said, we don't have to spend it. We can put 200 in. Something might crop up.
well, should we, so here's the question though, where are we getting the better return?
Oh,
Uh,
Crestwood.
So is it easier to keep the money there? We allocate, we approve that we are gonna spend up to, let's say, 200.
Mhm,
We keep the money there as
mhm.
long as we can, and then we move it to Webster when it comes time.
Absolutely. And I would hold off and wait before you approve it. You're meeting in 2 weeks.
Yeah,
So, which is a little bit early, but even if you were to meet again, say the middle of March and to see how the market is then.
yeah, but even if we approve it, nobody says we have to move it from Crestwood.
Well, you would not be moving anything until the budget season anyway.
Right, so
Oh.
we just approve it now.
Yeah.
so we're
Well,
not gonna
approve
move
it. I would wait until February, Tom, because you
Okay.
have those extra few weeks before you approve anything. You have to hold the meeting in February anyway.
Right.
Okay,
Yeah, we wouldn't do
And that would,
that.
but that would, these are, we're talking very basic preliminary numbers here, a few more weeks
Mm,
may give me the opportunity to have some solid proposals.
Yes.
Yeah.
okay,
That's true. And we don't have to give the town a number until March 1st.
Oh, late, or even later during the budget process.
Right.
Orla says that as she's leaving.
I know.
Yeah, yeah, okay.
June 29th, you can give it to them.
Exactly. Well, you guys, your Board of Ed has to approve it also.
That's
So,
true.
so keep that in mind too. But I can't come to the meeting on the 7th because that's the first day of the job.
Right,
So,
understood. But it's
But
an
I
in
want-
and out number anyway.
yeah, so keep it, so before that meeting, Kathleen, it might be a good idea to get in touch with Billy, see where the account lies.
Okay.
You guys know what you have available in maintenance, you know what you have available in the windows. We know
Mhm.
what we've approved today, but before any more discussions, if something hey, maybe in 2 weeks, it'll be 200,000 higher. I don't
Right,
expect it.
Yeah, no, but anyway. Okay, I've got,
Market's always moving.
yep. Okay.
all right, so it's okay, we just put this discussion, table it until February.
Yep, And-
Bill's gonna try to have them sharpen their pencils. Maybe it'll be a donation that they'll do it,
mhm.
maybe not.
Yeah,
But keep
maybe.
in mind, keep in mind this money and as its impact on the town budget, it's revenue and costs, so it cancels each other.
Oh, yeah, it's a wash. Yeah.
Yeah, it's wash.
Okay. All right, so that'll be tabled. Bill, you have anything else, or Joe, anything else? Melinda?
Good.
No, because the birds all moved out.
Good.
They'll be back in the spring, just
Yeah.
about the time they're gonna pull up the concrete.
No, we have hawks living on campus and they're scaring away the pigeons.
Oh,
Seriously?
Oh, seriously.
I gotta love nature.
We went from
And
pigeons
they're-
to hawks.
And they are, and they are pretty good sized hawks.
Wow.
So what comes in after the hawk?
Well,
The
well,
eagle.
we've got eagles. We also have eagles.
We got
Oh, my
eagle.
The ultimate food chain.
Maybe there's a zoo. Is there a fund for, or a grant that can be written for a zoo? Maybe we can qualify for that one.
Okay,
All
well.
right, so
all the
no other
Christmas
projects that you can think of right now other than these?
Not at the moment.
Oh,
All right. Anything under old business?
Did you guys do officers?
no, we're gonna save that for February.
Oh,
because
makes sense, yeah.
Yeah.
We're missing people.
Yeah, so just on the treasurer side, you're
Mhm.
best to elect, I'll explain to you what's going on with the treasurer. So it's gonna be me and Aaron.
Yep,
You can elect me in my absence, or you can elect Aaron.
Is there a conflict? There's no conflict with him being the Board of Finance Chair, is there?
No, there isn't. He can be the town treasurer, who is automatically the trust treasurer, because he is a non-paying elected member of a town board.
mhm.
All right, and anyways, it has to go and have approval of the Board of Finance anyways. It's not just
He
his
will.
vote.
Mhm.
It's not just his vote.
Yeah, all right. Yep, Melinda?
So we had scheduled secretary negotiations on February 7th and talked to Kathleen, and we are going to move that up to probably 7 o'clock. Could we stop the meeting on the 7th at 5:30? So we
Yeah.
would have time to get to the next one.
Yeah, that's fine.
Mhm.
Uh,
Yeah, because you should be in that meeting too, Tom.
Yep. Yeah, the 7th, I have nothing.
Okay.
Now you're double booked.
Perfect.
Okay.
All right. Old business,
Mm,
nothing.
For me,
mm-mm,
Okay. Any new business?
mm.
We have no money, so,
We need lots of things done.
yeah. Bill, the honey-do list, nothing more on the honey-do list, okay? All right, so we're gonna set our next meeting for February 7th at 5:30.
Yep,
And is that gonna be Zoom?
yeah, please.
With a public hearing, can you have a Zoom public hearing?
Mhm.
In
Why
that
not?
case, go ahead.
Yep, we can.
All right, and Melinda, the secretary's meeting is in person, correct?
No, it's on Zoom.
Okay, perfect.
Until Kathleen changes it.
Yeah, I know that's what, up until February 23rd, right, is the executive orders on all those, is that right? Or is that not fall into that?
No, it might be changed. He's looking to change.
Okay,
Yeah, February 15th, everything, well, at least the ones we live under. By
15th,
Mhm.
okay. All right, so I guess all of that is taken care of. And Bill, you'll let me know if I have to sign anything. So with that all said, I think we're okay to adjourn.
Okay.
Thank you all. Best of
Okay.
luck with all your projects.
Okay, I make a
I'll
Thank
see you
you.
at I'll be at many meetings. I'm sure I'll see you guys around.
Yeah,
Okay.
best of luck to you and the family, Ola.
Thank
thank
you.
you. Thank you.
All
all.
right, thank you, everyone. Have a
you.
great evening.
Okay, bye-bye.
Bye.
Night.
Bye.